We got some unfortunate news for Visa stock investors as the Justice Department sued Visa on allegations that it illegally monopolized the market. Now, I've been talking about how powerful Visa's market share has been as one of the reasons why I recommend Visa as my top-rated dividend stock to buy. This is more evidence on just how strong Visa's market share and market power truly is. So in this video, I'm going to review these latest developments and what it could mean for Visa stock investors. And most notably, I'll answer if I still think Visa is an excellent dividend stock to own.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so like I mentioned, the Justice Department sued Visa on allegations that it illegally monopolized the market for consumer payments worth trillions of dollars every year. Visa's stock price was down by roughly 5% yesterday and then another 1% today. The Justice Department saying that Visa used carrots and sticks to keep potential competitors off its turf and to threaten rivals against doing business with other companies. Now, Visa boasts significant market share in this area, and competition is not that fierce. And this could be one reason why the Justice Department went after Visa, because it noticed that the competitive pressure in this industry is not how it usually is, right? Typically, companies in an industry fight with each other. They cut prices, they offer new products to try and gain market share against each other. But Visa and its main competitor, MasterCard, they haven't really went toe-to-toe, and others haven't really challenged Visa. And that really triggered the Justice Department to dig deeper and understand why this is going on. In response to the allegations, Visa's general counsel, Julie Rottenberg, said that the lawsuit ignores the reality that Visa is just one of many competitors in the debit card space. Rottenberg added that they're proud of the network they've built and the innovation to advance the opportunity. They say the lawsuit is meritless and we will defend ourselves vigorously. Interestingly, Visa's market share in debit payments is about 60%, and it earns nearly $7 billion a year in debit swipe fees. It dwarfs other players in the industry like MasterCard, American Express, and Discover. And to be fair, I've been talking about how powerful Visa is. It's dominant in the industry, and I can share with you Visa's operating profit margin at 67% is one of the highest operating profit margins I've seen out of any company. And just to put it in comparison, MasterCard at 58% is the next closest. And if you want to compare with other companies like Microsoft, which also has been at some point in time claimed to have too much market share, be close to a monopoly, its operating profit margin is only 45%. And then you look at Alphabet, that's only 30%. And Alphabet's been in this crosshairs as well, being threatened with litigation because they have too much market power, but their profit margin is only 30%. And the reason I look at profit margin to find evidence of market power is because if you have market power, if you have close to a monopoly, that means you have pricing power. You can raise your prices and generate excellent profit margins. But if you don't have strong market power, then you're always competing on price and you're having to offer more and more at lower and lower prices, which shrinks and contracts your profit margins. So if you have a very strong profit margin like Visa does, it's usually evidence that your market power is extremely strong. And I've been talking about that for a long time with Visa. That's why I really like Visa stock and recommended it as a top dividend stock to buy. And I own Visa stock. I also own MasterCard stock because I like the competitive dynamics in the industry from an investor perspective. I like it. But from a consumer perspective, of course, it would be better for consumers if there was more competition in the space. It's usually always better for consumers if there's more competition, because those companies will compete against each other and they'll have to lower prices or offer more services, and people get more for their money. But when there's less competition, it's the opposite. It's good for investors, but it's bad for consumers. That's why anytime you find yourself in a position where you're angry about a certain company and the market share or the market power it has in pricing, you can go on the other side of the equation by looking at the stock, looking at it as an investment, and thereby kind of mitigating the impacts you feel as a consumer, because as an investor, you will own that stock and you'll benefit from its market power, from its pricing power. Now, Visa's stock price has performed excellently in the last decade. It's up to $269 per share, but in the last week, it's been under pressure because of this news. It's fallen from $290 a share down to $270 per share. And usually in these circumstances, I'm not concerned about litigation from the Justice Department claiming a company is a monopoly and splitting it up. But Visa's a little bit different because the business doesn't have like separate parts. Like, for instance, Alphabet, they have YouTube, they have the Google search, they have the Google Suite, and then they have the cloud business. They have other bets. They have several parts of the business that if the Justice Department was to force them to split up, you can see the different parts that will be split up. With Visa, it's kind of curious. How would they split up Visa's business? Would they split it like the debit card side of the business and the credit card side of the business? It's a little bit curious. And in the article, it states that this litigation could take several years before an outcome is released. And it could be a forced split. It could be Visa having to pay a fine of hundreds of millions, if not maybe several billions of dollars for its practices. So this is not good news for Visa stock investors. And the stock price decline reflects that, right? The stock price should be down if you're faced with this kind of situation. Now, the stock price is trading at a forward price to earnings of 24.3. It's still relatively cheap according to its organic business fundamentals, which, as you see, the market power is so strong for this company that the Justice Department is going after it, which is the market power itself is good news for investors. So for now, I'm keeping Visa stock rated as my top dividend stock to buy. I'm going to dig deeper into this, look at the potential outcomes and how it could be negative for Visa. The good news is that it looks like this is going to be a long time thing, and it's uncertain if the next administration will be as aggressive in going after companies like the current administration has. The Democratic Party has been aggressive lately, going after several companies, including Visa, with this market monopoly claim. And it'll be interesting to see if the incoming administration will be as aggressive, or will they kind of back off and let business do business. So for now, I'm not making any reactions with Visa. I'm keeping it rated as a top stock to buy, while still acknowledging that this news is not good news. It's unfortunate news for Visa stock investors. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.